All right, so Lizzie, you sent us some notes, and you're citing some of the bearishness out there. I couldn't get the words out. I want to combine cite and bearish together. Some of the bearishness out there. We're looking at the AAII survey, bearishness just increasing. Also looking at Polymarket, their odds of a recession increasing over the last couple weeks as well. But then you cite this other thing. It's the Bank of America Fund Manager survey that shows we're seeing some of our most bearish levels, fifth most bearish level in the last 25 years. The other four are buying opportunities. So where are we at? Are we in the face of a recession where we need to batten down the hatches? Or are we right in the middle of a buying opportunity?
Well, Frank, that is the $1 billion question. I think both in surveys and then what I hear every day from retail clients, sentiment is terrible. And if you look at that, I think that Bank of America Fund Manager survey is very interesting because the other four times, 2001, 2009, 2019, 2022, all four of those times in hindsight were excellent buying opportunities. But what we know is that bottoming is a process. Oftentimes, that process can take several months, so patience is key. And what will be critical is to determine how some of these softer indicators that have turned more negative. Usually it takes 3 to 4 months for that to work its way into the hard data. So the longer this uncertainty persists, the longer we have negative rhetoric out of the Trump administration, the more damaging that is to the market. So the commentary that we heard out of the White House yesterday is certainly positive, but I think we need to see some progress being made beyond just commentary.
So, Lizzie, I would imagine a lot of your clients are coming to you looking to play a little bit of defense, at least somewhat when it comes to their portfolios. Where are you seeing opportunities for defense? One area that's been mentioned quite a bit is the defense sector. And this morning, we're getting some news that Spain plans to up its defense spending. Do you see that as a good defensive sector for this current environment?
Well, sir, I think that you have to look at the individual, and then I think whenever you have periods of significant volatility like we have, if your asset allocation needs to be readjusted. And so with these rallies we're seeing, if going into this sell-off, you were improperly positioned, you should use the rallies to basically sell and rebalance into an appropriate asset allocation because volatility is here to stay. I continue to believe that we are in a secular bull market, and for that bull market to remain intact, leadership has to remain intact. So longer term, I do think that technology leads the market. I think financials are set up to do very well, particularly if the economy does not deteriorate materially.
Well, I mean, you're leading me to my next question. What other areas would you put money to work if you want to be a bit more offensive as opposed to defensive? Over the next week, we get a couple more Mag 7 earnings. Obviously, we're just coming off Tesla yesterday. Is the Mag 7 where you want to be, or are there other parts of software, tech? I've heard some people talk about software and also cybersecurity. That really seems to be a secular trade right now. A lot of people concerned that the trade war could kind of balloon into some other type of conflicts, either in the digital space or some other ways.
Yeah, I think it's a great question. And I think you see companies like Netflix really rallying on insulation from tariffs. So I think, from an investor standpoint, in a lot of ways, once we know the rules of the road as it relates to tariffs, you can look through the individual companies to determine where the supply chain is, where revenues are coming from, because I think that is critical. And the setup for active management, again, once we know the rules of the road as it relates to tariffs, will be very important. So you can't look at it on a monolithic basis, but if you look at the individual company, once we know, in fact, what the tariff policy will be, I think that there is opportunity, and we've seen several of the darlings of the market really sold off indiscriminately. So it's still, I won't say that there isn't more downside to come on technology, but the Nasdaq's down 20%. So I think that part of the market is really oversold and set to rally. But again, I think we're still bouncing here until we find bottom.